Sassine, good to see you. So a bit of a disconnect here in the guidance between what the street was expecting, what you're delivering. But first of all, tell me about the quarter. Pretty much bang on, a little above with revenue and certainly with EPS. What's going right? And then in a challenging environment for semiconductor makers and some of your customers, what are you seeing from them?
Hey, John, good to be here. First of all, we just wrapped up a fantastic FY24, 15% growth, 25% EPS. As far as Q1 comp, Q1 25 comparison to Q1 24, there are some mechanical accounting, I want to call them, that I'm looking forward to explaining on our earnings call to our investors. What we had in Q1 24 is an extra week. And our software security business, which we sold in Q2 and took it into discontinued operation, is throwing off the comparison. As well as, you know, we have a mix of our product portfolio that is upfront revenue. So quarter to quarter, there is a disconnect. However, if you look at the year, we're still guiding a double-digit growth for FY25 after a 15% growth in 24. And if you zoom out, after a 15% CAGR growth over the last 5 years. So we're very confident about where we are and where the year is going to shape out to be.
Okay, you mentioned the full year. I do want to put that in perspective. The consensus on the full year revenue is at $6.905 billion, and you're guiding to a range of $6.745 to $6.805. So how much of that has to do with the fewer weeks that you pointed to in the first quarter? How much of it is you also being careful given the state of the semiconductor market right now and how your customers are behaving?
So some of it is the accounting, and the other part is if you look at the macro today, we are living in the semiconductor market in what I like to call in a tale of two markets. You have the AI infrastructure build-out. So any company who's delivering to the AI infrastructure build-out, meaning if you're a memory semiconductor provider or a advanced logic CPU, GPU, you're killing it. You're doing very well, and we're benefiting greatly from it. If you look at the second cohort, which is the mobile, the PC, industrial, automotive, they're still trying to find a way to leverage AI on devices and still trailing in the recovery. Now, as far as Synopsys is concerned in serving that market, we do well. And the reason we do well, we're tied to R&D. But we're not growing as fast as the first cohort, which is the AI infrastructure cohort.
Keeping all of that in perspective, I want to talk about systems. You expect your Ansys acquisition, I believe, to still close in the first half of calendar 25. And that is more beyond just the chips themselves, envisioning how all of these systems are going to work together, being able to model that for customers. We've seen more of this AI expectation showing up in results of companies, even like Pure Storage here on Overtime yesterday, and retooling the degree to which storage draws energy in the data center. How much are those changes, and even how infrastructure is being placed in the data center, how much is that influencing the need for the type of software and modeling solutions that you expect for Synopsys to deliver?
Yeah, that's such an exciting area for Synopsys. As you pointed out, with the Ansys acquisition, which is a $35 billion acquisition we're anticipating to close the first half of 25, we envision Synopsys to deliver the engineering design solutions from silicon all the way up to system. Almost every hyperscaler that I have conversations with, they're looking to optimize at the system level. What does that mean? As they're building their data center, of course, it's filled with semiconductor components. But in order to optimize for energy, in order to optimize for security, for reliability of this data center, you have to take into account the system performance, the workload, the software you're running on that system. So Synopsys plus Ansys will provide that engineering workflow from the semiconductor all the way to that system level definition. And that does not only apply to data center. Envision the future car or robots or industrial applications. They all need to optimize from that silicon to system.